We're going to demonstrate job costing in a service organization using exercise 742 as an example. A service company, the cost flow that we're going to record through the T accounts is going to be very similar to a manufacturer, but there's going to be some nuances, and I'll show the accounts they're asking us to show the flow through. One nuance is you only see one inventory account, and that's work in process. As a service company, I'm not going to have raw materials. I'm also not going to have finished goods. Additionally, you were used to seeing cost of services bill, or excuse me, cost of goods sold as your expense account because we sold a good. We're not selling a good, we're selling a service. So we're going to call it cost of services billed instead. Again, that's going to be an expense account. And slightly different control account and applied account. It's not manufacturing overhead, it's service overhead control and applied service overhead. We're going to jump into recording these entries directly into our T accounts, and the first item they ask us to record is our labor costs. Again, for a service company, they're not going to have material costs, just labor and overhead that we're going to record. Well, what's the total labor cost? Let me jump back up here, and they tell us that the total hours worked on two different jobs, and this is a dispute mediation firm, is 440 plus 660. They also tell us above that the labor cost rate is $200 per hour. So I can simply take that labor rate of $200 per hour times the combination of 440 plus 660 hours, which is 11,100 hours, and I get total direct labor cost of 220,000. Much like a manufacturing company, I'm going to debit work in process for 220,000, add it into work in process. And since they didn't say I pay cash, my assumption is I need to accrue it and credit wages payable, the liability account, also for 220,000. Now, the only other component of cost is going to be overhead, and I need to apply my overhead. So again, I need to look for direction of what's my predetermined overhead rate going to be. They're going to apply overhead up here at $40 per direct labor hour. Already in A, I know the number of direct labor hours was 440 plus 660 or 11,100. I'm multiplying that now by the overhead rate of $40 per direct labor hour. It gives me overhead applied of 44,000. Again, much like a manufacturing company, I'm going to debit work in process for that 44,000 applied and then credit the applied service overhead account for 44,000. So far we can see that my balance, my accumulated balance of labor and overhead for these jobs for this period is 220,000 related to labor, 44,000 related to overhead for a total of 264,000. Why do I need to know that? Because in C, I'm going to record the cost of services billed. So I want to stress here, they're not saying I want you to record the revenue that you've earned in this scenario. In a manufacturing company, they would have said, I want you to record the cost of goods sold or the expense. Here, it's called cost of services billed. What is that cost? The total balance and work in process, because you can't leave jobs. This job is either finished or unfinished. It's finished, so we're going to move it out of work in process by crediting work in process. And again, we don't have goods, so we're not moving it into finished goods. We're moving it directly into the expense account cost of services billed, or debiting it to cost of services billed for 264,000 so we can match it against the revenue earned. Our last entry that they list here is going to be D, and that's recording our actual service overhead. So we did this a bit backwards, that we applied overhead before we recorded the actual cost. So I'm going to go back up to this scenario and look for direction in terms of what were those actual overhead costs, and they identify those as 42,000. So I'm going to debit service overhead control account for the actual cost of 42,000. You're looking at this saying, I don't see a credit. I would have either credited cash if I paid it or credited something like accounts payable if it hasn't yet been paid. They just didn't give us that particular account to record the T account, but certainly there would be a credit for it. I will note it appears like we've recorded all the entries in the T accounts. One very confusing thing in this problem is that there's another journal entry that we need to record. We can't leave a balance in our, as part of our closing process, we need to clear out our service overhead control account because that's a temporary account, just like we need to clear out applied services overhead, also a temporary account. They just didn't spell out we needed to do that, but that's part of the process. And we need to look at any difference between those two to determine if it's over or under applied overhead, and calculate that and record that also. We applied overhead of 44,000 when we only had costs of 42,000. That's a difference of $2,000. And in this situation, we over applied overhead by $2,000. How are we going to record this with a journal entry? Well, if I currently have a credit balance in applied services overhead of 44,000 and I want to reduce it down to zero, I need to debit applied service overhead for 44,000. Similar for service overhead control, if it's a temporary account and I need to clear it out and it has a debit balance of 42,000, I need to credit it for 42,000. What's the difference? Again, for those two accounts, it's 2,000. I need an additional $2,000 credit. I only have 42,000 so far. I need to bump it up and balance it to my debit of 44,000. What am I going to credit it to? The difference is going to go to cost of services billed. And why does it make sense that I'm crediting cost of services billed? We applied too much overhead, put too much overhead or debited too much overhead into cost of services billed, and cost of services billed is an expense account. We need to reduce it or remove that $2,000. Once I post these, you can see now I've reduced the expense account cost of services billed from 264,000 down to 262,000 with the credit, and I've reduced my balances for the service overhead control and applied service overhead to zero. So I'm happy that I've closed out those two temporary accounts. The last thing I need to accomplish is an income statement. The starting point's always going to be revenue. Well, they tell us that we billed at a rate of $500 per hour, and we've already gone over the number of direct labor hours that were worked. That's 440 plus 660. That's 1,100. 1,100 hours times 500 hours is service revenue of 550,000. That's the only additional thing that we need to calculate as far as a line item here. Well, I already identified our expense of cost of services billed, our original amount of 264,000 that we calculated, plus our over applied service overhead of 2,000 reduces down our cost of services billed of 262,000. Similar to a manufacturer takes revenue minus cost of goods sold to get gross margin, we're going to take our service revenue of 550,000 minus our adjusted cost of services billed of 262,000 to get a gross margin of 288,000. Don't forget, this is the service related costs. We also need to subtract out any period cost or our general administrative or marketing related costs, and they identify that up here as being 200,000. So gross margin of 288,000 minus our marketing and administrative expenses of 200,000. That's our period related expenses. It should get dropped off the bottom line, brings down our operating profit to 88,000.